Right now. We spoke about the banking space, we spoke about IT. Let's speak about CSB Bank, the first management on the show today. The company reported a fairly strong fourth quarter business update where advances, deposits, both of them showed strong sequential growth. So to discuss this and more, we do have with us Pralay Mondal, who is the MD and CEO at CSB Bank. Thanks a lot, Mr. Mondal, for joining in. You know, I'm looking at your deposit growth, and that's the number that really stands out for me. A 24% jump year on year and a 10% jump quarter on quarter as well. That's better than all the others that we've seen in the industry. So the question is, what did you do differently and how much of this is sustainable from here on?
Good morning, Mangalam, and thank you for having me on your show. You're right that we had a good growth, not only on deposits, but on assets, fees, everything. But of course, if you have to grow the overall balance sheet, liquidity and deposits is very important, especially in the kind of quarter we were in the last quarter, which had liquidity deficit. So we wanted to ensure that we manage the liquidity risk in terms of CD ratio, LCR, everything right. So we said that deposit is a first priority. And we ensured that all our businesses, whether it is a wholesale, SME, retail, branch banking, everywhere, we are focused on deposits, and that's the result which you're seeing today. We had a growth not only on deposits of 10% quarter on quarter and 24% year on year, but also we had a quarter on quarter good growth on CASA, which was 10%, which was very, very pleasant for all of us. Having said that, I think the big picture is that all our segments, whether it is retail, SME, wholesale, and gold, at least in my tenure, for the first time, all four verticals have done consistently well across, and almost no business has grown lesser than 20%. Every business has grown higher than 20 to 23%, and that's a very, very big positive for us, which says what I was telling all through, that now most of the verticals will consistently deliver. And hence, while gold continues to do well, but on a quarter-on-quarter basis, some of the other businesses has grown faster than the gold, and hence we'll see that our mix, at least on a basis point basis, gold can come down a little bit, though gold has also grown year on year at 35%.
So in that case, if you could give us a sense of what growth should we expect from an advances standpoint across all your verticals and overall as well. You said gold as a percentage will come down because other sectors are growing. So if you could give us a sense, say MSME, private loans, etc. At what rate will they grow? What rate would your overall book grow? And what is the expectation on gold as a whole?
Yeah, so Mangalam, we have always said that we have a vision SBS 2030 by which by 2030 we will have wholesale 30%, retail 30%, gold 20%, and SME 20%. We are on track because we are significantly putting our technology transformation this year. This is the last year by when our entire tech stack will be in place. We are going through a core system migration, entire surround system changing, which will help us in building not only the liability franchise, but also the entire retail assets franchise. So we have now started our retail assets journey in real earnest this year, and you will see the impact of that next year. On your specific questions on assets businesses, we have seen a significant quarter-on-quarter growth on the wholesale side. SME has also done very well. Retail, we have been a little careful on the unsecured MFI in that space, and hence some of those businesses has degrown. But overall, some of the other businesses we have focused on that has grown very well. So, and gold has grown like 8% quarter on quarter and 35% year on year. So overall, I think if we need to give a forward-looking kind of understanding, we should be able to grow upwards of 25% in assets growth, and it is quite comfortable. The big question is how do we manage the liquidity and how do we manage the deposits? Assets growth is not a problem for us.
And what does that do to your, spreads, NIMs, and credit costs? Because if your assets are growing over 25% and you are still, maintaining some sort of caution on unsecured loans, at the same time you're drumming up deposits to hold on to the liquidity that you have. What does that mean in terms of guidance, if you could give us for your NIMs, spreads, and asset quality?
Yeah. So on NIMs, what happens is when we are primarily focusing on gold loan as a primary business, NIMs, of course, were high. And this year we had, penal interest, which was withdrawn from a regulatory perspective. Our other business mixes are growing, which doesn't have that kind of a yield which a gold will have. And we have significantly slowed down on the unsecured side. Given all this perspective, obviously, we will come to more realistic level on the NIMs. And generally, the industries, I mean, I would say that the mid sectors or the large sector banks are somewhere around 4%. I think we will be trying to put ourselves somewhere between 4.4, 4.3 in that range. But I've always said that growth is what we are looking at. And once our tech transformation, which is a big year for us, this financial year is where we'll redefine the bank completely, moving into a complete modern system. And hence we can do everything what other banks can do. Once we do that, I think the overall franchise concept will start delivering. On the asset quality, I think we're doing pretty well. I mean, even last year we are below 20 at 20 basis points on credit cost. GNP and NPA has been below 1.69%, below 60 basis points. I think at that level we should be able to hold on to our kind of NPA. A few basis points up and down will continue to happen, but I think we're pretty comfortable on the credit quality of the portfolio.
Right, Pralay, we'll leave it there. This year will be transformative, and we wish you all the best of luck as you continue to execute that. Appreciate it, and we'll chat again soon. Thanks very much. So that is CSB Bank with perspective there on their business.